Alright, so today we're literally just gonna go through the basic, the most basic stuff. Some serious basics. Just basic market structure and what a candle is. Oh yeah. These are candles. You got the body, which is, as you can tell, body, and then we have the wick. So the body is, let me not even bother that. The body tells you where price closed and opened. Okay, so let's say this is a 1 hour candle. Yeah, this is what price has done in the last hour. The wick, which is these bits, show you how high price has gone in that hour. Yeah, this is the highest it has been in that hour. Yeah, and this that's the opposite, shows you how low it went in that hour. Now the body shows you where price was when the hour started and where price was when the hour ended and went into the next candle. Obviously you got blue and green candles, candles going up, candles going down. Now this is, let's say this is a real candle. These are two real candles next to each other. Price has gone down to here. Actually no. Price has gone into this candle here, yeah. Price has gone as high as this point, but it has also come lower down to here, as low as this point. But then when this hour was over, price closed at this, pardon me, price closed here, going into this candle now. Price has come as low as this point and it has gone up. It has gone as high as this point, but it has also closed here and gone into the next candle. But because this is red, price has entered here and it has closed down here, and this is green, it has opened here and it has closed down here. Now they're the candles, yeah. So on a chart you have, I'm sure you recognize this, you have things called lower highs and lower lows, higher highs and higher lows. Now you also have downtrends. This is a downtrend where price is coming lower, it's making lower lows, lower highs, lower lows, lower highs, lower lows. Now for price to then come back up and close above the previous lower high, creating a high and then a higher low, it is now forming an uptrend. And so basically you have downtrends, you have uptrends, and then you have sort of consolidation, which the price is just not really doing much and it's just going sideways. Yeah, so prices, let's say, let's just start from here. This is a low that has made a high low, higher high, sorry. There's not enough room on here, but then creating, then creating higher low, then creating higher high. Our price has struggled to sort of, go past this high, if you want to say. Price has now closed a candle in this area has closed back below this low, changing the direction of price, breaking structure. So this is a little mini uptrend. Price closed below this higher low that was previously made, changing it to a downtrend. which is now making, this is a lower low, and then after that it has made a higher low, sorry, lower high, then creating another lower low, then another lower high, and then another lower low. Price, yeah, struggled to come, hasn't reversed here and come back below this lower low. Instead, price has pushed back above this high, this previous lower high with momentum. Yeah, energy, volatility, however you want to put it, creating a high. High low. High. And so forth. Now, whether from this point price will come down to here, filling in this imbalance, which you'll learn later, a gap in price, you'll learn about later. It will either continue, it will either come back down below this and create a lower low, displacing past this previous higher low, breaking structure, basically, or it will carry on in an uptrend, creating higher highs, higher lows, higher highs, higher lows. That is it basically. Now pause the screen, have a little look if you want, but I'm going to show you some real chart examples. So as you can see, right, first we have an internal, let me go back to it. You have internal range of liquidity, internal highs and lows, and then you have external highs and lows. So for example, this is an external high, this is an external low, and then this will be, and then if this went lower, if this happened, this would be an external high. Do you get what I'm saying? External, external, external. They're sort of the bigger picture when you look at it from a bigger picture. And then the internal are the smaller ones on, like, in between. So as you can see, these are external, which is sort of more obvious on a higher time frame / lower, you know what I mean. These are the external ones, and then you can see these are external. Now these are the internal ones. So lower high, lower low. This is a lower high, but it's a breaker structure, as you'll see in a minute. Lower low, creating a lower low. Now price has then pushed back above this previous high, creating higher lows, higher high, higher low, higher high, higher low. Don't know why this isn't marked down, but high low, high high, high low, high high. As you can see on here. Now, I might not be explaining it right. I might not be giving enough detail, but this is enough for you to go and either practice on a chart or go watch a couple other YouTube videos
and then go and mark out on the chart yourself. Download TradingView. You can get it on your phone, computer, whatever. It's free. I'll put a link in the description for you to go and have a look. But yeah, that's basically basic market structure. Uptrends, downtrends, consolidation. You can see price isn't really going anywhere here, and then it breaks out of it, manipulating to the downside, and then going back above. Yeah. I'm trying to think, is there anything else to add? Alright, now, if you've got any questions you want me to do, cover anything, leave in a comment. And if you already know about this and you're watching this and you can see I've missed things out or I've got anything wrong, whatever, leave a comment, show me, innit?